Hi, it's Adam Hewison. I'm coming to you from the digital studios of MarketClub, and the market that we're looking at is the NASDAQ Index. And the symbol for the NASDAQ Index on MarketClub is COMP. And I'm going to just show that right to you here. So that's where you always find the symbols on MarketClub. Now, this is going back to when we made the highs in basically '07. And then we had obviously the terrible downfall, some would call it terrible, downfall in '08, and then the lows that were created in March of '09. Then we had a rather sweeping up move here, which I think surprised a lot of people. And this is where I think that trade triangles, or trade triangle technology, can help you get the most out of the markets. And I'll show you how that works. Because basically, if we just put in our monthly trade triangles, you can see right here, I'll just pull this up for you so you can get a better idea. See right here, at 2,266, the market crashed, and then at 1,665, over 600 points lower. We had a signal that the market was going higher. Now, did we predict the market would go this high? No, I don't believe anyone predicted the market would go quite this high. But what's important to look at right now is this. I'm going to take this off the screen. I'm going to put our Fibonacci tool in, and you've seen me use this before. We've used it numerous times. You pull it down, very cool, and you put it on the lows here. So you go from the highs to the lows. And the retracement levels here are 23.6, 38.2, 50%, and 61.8%. Now, what's important to know and to watch in retracement levels, and I'm going to put this, I'll show you what I'm talking about now, is this. Once you get into this area here, okay, this is what we call thin air, which means in a retracement, the market's going to have a very difficult time in this zone. Now, we just surpassed, it's not unusual just to go a little bit past a retracement level. The other indexes, the Dow and the S&P, did not do this. They didn't get much past their 50% level, and you've seen a turn down in the last few days. We're doing this live. It's Tuesday, and it's just after the close. The market did not close particularly well, and I want to show you something that's, I think, more important. And this is one of the most powerful tools you have as a trader, and that's a very simple trend line. So I'm going to take everything off the screen, and we're going to look at trend lines and just how powerful they are. So close it off here. We close the Fibonacci thing out here. And then we're going to scope this in a little further so we can get a really good idea of this trend line. So we're going to go from the lows here right through, and we'll see what happens. So with a trend line, you want to connect three areas. And hopefully I can do this. And we've got three areas, 3 points of connection. Now, 3 points of connection, I'm going to show you something else as well, but 3 points of connection are really here, and here, and here. And as you can see, we've gone below the trend line right here. That is not a good sign. This is a trend line since March. So you've got March 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost 11 months you've got in this trend line. And the market just breaks down. The longer the trend line, when it's broken, the more important it is. Now, I'm going to show you, because I'm sure someone's going to bring this up, but I'll show it to you before that occurs, and that's this. You could also draw a trend line from this level here. Whoop, just 1 second. From this level here through here. And this indeed may happen again, but the reality is the market broke down below here and then came up and made new highs. The only difference is this. In this particular case, in my opinion, is that you are seeing the momentum really kind of slow down. Plus, you've got the retracement level. We talked about that before, which is right here. This is 61.8% retracement level, which is a Fibonacci level. Classic Fibonacci level. Thin air. The market's going to have a very hard time going over this level. In fact, today's action, I think, was very, very negative. And I think we'll see this market come down. So what do we learn from here? How far can the market come down? Can it get down to here? Can it get down to here? Well, let's see. that's when we use the Fibonacci tool again to determine the retracement level. So I'm going to take everything off the screen again. So very simple to do with MarketClub. You just simply, I'm going to leave the trend lines on here, but I'm going to put in the Fibonacci retracement level. So we're going to go from the highs here and drag this down to the lows that are right here. Now this is a close-only chart, daily close-only chart on the NASDAQ. So here we have the retracement levels, which we expect to see in this market. So we could potentially go all the way down to 1700, or in this case 1671, or we can get down to 1800 or 1796. So I would say we are in for a good pullback here. This does not look good at all. And the market action was not good the last few days, and I think we're going to see more of a pullback coming in. And I think this is going to be reflected in traders' attitudes. And there's going to be a lot of people who have made money on the way up here, and they're going to want to lock those profits in. Certainly, holding through to 2011 doesn't seem to be an option in terms of taxes, but I think we're going to see the market come down to these levels somewhere in the next month or two, or several months. We'll see what happens. But generally speaking, the glass is being broken, or the trend line in this case is being broken, and we would expect to see a pullback. But the other thing you can use, which we've talked about before, is our trade triangle technology. Very simple to use. It's if you can click here, you basically get it right away. So I'm going to move that up to there, and you can see our first signal right here, which was at 1,665. Now we use our monthly for the trend and our weekly for trading, timing the trade. So you can see here, we put the weekly in. It's very simple. Just click here, and you can see right away we had a signal here at 2,269 to exit this position. Here it is. We're some 66 points lower, and it isn't over yet. So I would expect to see the market pull back at least to the 38% level, and possibly to 50, and even down to all the way down to about 1,700. It's going to be fast, because the old adage is they slide faster than they glide. So this is Adam Hewison. Please pay attention to these markets. Very important. We've got a negative 60% score, and we're getting very close to seeing the monthly trade triangle turn to a negative, and I think that's the key thing. There's the monthly right here, and I think if that turns to a negative, we've got a major trend change on our hands. So keep your powder dry. Get ready to trade some exciting markets in 2010. I'll be coming back to you soon with a new video. Adam Hewison from MarketClub. All the best.